In today's trade of the day, we're trading the mini Dow here in the futures market, and we are getting ready to go long this market. You can see that it started to rally, and I took the first trade off of this bottom. I had a hard time picking the trade of the day today because I had about 6 or 7 really good trades, but I think this next one that's about ready to come up here was probably a great example of how to get into a market that's already started to run. So as you can see, the market's around up 1, 2, 3, 4, 5, 6 nice big green bars. We have a red pullback bar. Notice that the high is lower than the previous high, and when it breaks above that red bar, that's a buy signal, so we'll take a long position. Now I'm dropping it an auto trailing stop, so the software will automatically do that for me. I just have to click one button and it puts my stop, limit, and trailing stop in for me. And as you can see, as the market starts to rally, it'll break above that previous high, get me into the market, and in this case I've got one contract. Now I've also got it trailing back behind the market, $35 back at this point, just so I can get in a little bit early, kind of a little secret killer method that I do with the auto trailing stop feature. And as that market breaks above that previous high, you can see the market takes off and starts to run. Now this ended up being a very good trade, only once again I was being very cautious and I only went in with one single contract. Now remember, we're in the futures market, so there is no pattern day trading rule, and we have one contract represents a $500 investment, and we are controlling 500 shares of the Dow if we were trading it in the stock market. So it's equal to 500 shares in the stock market, but we only have to put up a performance bond of $500 margin. And so as this market starts to rally, you can see we're up about $100 right now. We'll just hold on to our horses and see if this thing won't push higher for us. We're up over $100 on this trade so far. Now we got a lower high. So what that means is if I hit a break that previous high, I can add in a second position because that's another buy signal, right? Higher highs and higher lows, lower highs and lower lows. Still waiting for it to break that previous high and rally on up to hit that sell limit order. As you can see, my stop just jumped up. Each time we get a new price bar, my stop automatically advances for me. The computer just does that. Now you can see we just broke the previous high. That's a good sign. I want to see it push higher. We're up about $135 at this point. Still waiting for that market to push higher and go up there and hit that limit order. There my stop moved one more time. There it breaks the previous high and starts to rally once again. I'm looking for it to continue higher. We're up at about 180. We just broke $200 on this position with a single contract. We're looking for it to go up and touch that limit order. I believe that the market's going to move a little bit higher, so I push that stop up all the way to 33,700, which is the even number. Markets like to trend up to even numbers, and so I'm looking for it to go up there, and we'll take our profits off at the sell one limit on the even number. I castled my position. I went ahead and took some profits off, so I'm locked in about $100 on this particular trade, and now we still have about $50 in open profit looking for that market to push higher, and we get stopped out. So we get stopped out with $160 on that particular trade. Not a bad little trade for a 6-minute time frame.